Last class, I guess, we stopped with which one? Insolvency of a partner. We prepare realization account, partners capital account, cash and bank account as usual. Then we close which account first? The realization first. If there is a realization loss, share that in which ratio? Profit sharing ratio. Garner versus Murray rule. What is the first one? The solvent partners should bring in what? Cash equal to the share of loss realization. Second, if there is a loss due to insolvency, what to do? We close. Last class, yeah. We close first insolvent partners capital. Insolvent partners capital we close. Okay. After recovery of any money, we close what? Insolvent partners capital. Okay. That insolvency is borne in which ratio? Capital ratio. If capitals are fixed, in the last class we have learned this. If capitals are fixed, only what is taken? Current account we ignore. Insolvency loss is borne in which ratio? That fixed capital ratio. Take that fixed capital ratio, ignoring current account or whatever. Then you share the loss. Last class, rendu problem padom. In both the cases, we shared the loss using which ratio? Fixed capital ratio. And the FSR problem pathina 2:2:1. And the ratio la. Then the next one, TSF problem, where we shared the insolvency loss in which ratio? The fixed capital ratio. So wherever current accounts are given, it is like fixed capital. Loss will be borne in which ratio? Fixed capital ratio. If the capitals are fluctuating, there will be no current account. All the adjustments are done through which account? Capital account itself. Then the insolvency loss to be shared in which ratio? Adjusted capital ratio. Now, what is that adjusted capital ratio? We will see now. Start. Type 2. Type 2. Insolvency. Fluctuating capital. That is, no current account is given in the problem. In the problem, they are not giving any current account. In this case, what to do? As usual, you will close realization account, you will close, partners capital account, that is insolvent partners capital account, and find out deficit. Okay. The deficit, that is loss due to insolvency, should be borne by solvent partners in which ratio? Adjusted capital ratio. Sir, what is the meaning of adjusted capital ratio? Opening balance plus reserves and surplus. Do you remember, if there is a general reserve P&L account and all, we will distribute in which ratio? Old balance sheet, there is a general reserve, there is a P&L account, what we used to do? We will transfer it in profit sharing ratio. That reserves and surplus you should consider. If there is a miscellaneous expenditure also in balance sheet, if there is a miscellaneous expenditure in balance sheet also, we will consider. Simple, let us assume there are two solvent partners. We will take which one? Opening balance. Add which one? Share of which one? General reserve. Add share of P&L account or any other reserve. Less which one? Miscellaneous expenditure. Less there is miscellaneous expenditure, and we will adjust for errors also. We will adjust for errors also. Suppose if errors are not rectified, like drawings omitted or asset taken over not recorded in books, cash used not recorded in books. If there is any error, that we will adjust it. If there is any error, we will adjust it. This is called as adjusted capital. Okay, as per Garner versus Murray rule, I was telling in the last class, the insolvency loss will be borne in which ratio? Adjusted capital ratio. So, how to calculate adjusted capital ratio? Do this. Simple. Most important thing, do not consider any realization items, which may be for calculating adjusted capital, okay, which may be realization loss or profit. In the adjusted capital, what should not be included? Realization profit or loss should not be included. Assets or liabilities taken over at the time of realization. So please do not consider the following realization items. Realization profit or loss, assets and liabilities taken over at the time of what? Dissolution. Otherwise, only balance sheet items should be considered. Okay, what do you mean by balance sheet item? Opening balance, general reserve, P&L account balances. If there is any error or something that has happened in the past that is rectified, that should be considered. Whatever happens at the time of dissolution, don't consider. What happens at the time of dissolution? The realization profit or loss, assets and liabilities taken over at the time of what? Dissolution should not be considered. So now we can decide in the exam what will be tested. Will they ask normal dissolution problem? No. What is the normal dissolution problem? Transfer assets, transfer liabilities, sell the assets, pay the liabilities, close the partner's capital account, settle. Nothing bigger in it. Insolvency loss with fixed capital. If that is also very simple. There is a loss due to insolvency. Last class பார்த்தோம். The loss 1608 in a ratio share பண்ணோம். Fixed capital ratio. Simple. Is it difficult? No. Now in the exam, most probable area is loss with fluctuating capital. Insolvency loss with fluctuating capital, where here is where many students go wrong in calculating the fluctuating capital. Okay, insolvency loss with which one? Fluctuating capital is most frequently tested in the exam. So for calculating fluctuating capital, do not consider these realization items, which may be realization profit or loss, assets and liabilities taken over at the time of dissolution. Okay, so balance sheet related adjustments you can consider. That is, before the dissolution, whatever is the balance sheet related adjustments you can consider. The question that we are going to see is one of the most important one and the most repeated one. It's a fantastic question. It will test you all the areas. Number one, normal dissolution. Number two, insolvency. Then finding out all these things. Okay. Shall we? Question number 8 and 10 last class pannu illaya. 8, 10 we have seen. Question number 9 we have not seen. Go to question number 9. Page number 148, question number 9. Please read through this. A, B, C, D. Okay, A, B, C, D are sharing profits and losses in which ratio? 5:5:4:2. Frauds committed by C during the year was found and it was decided to dissolve the partnership on 31st December 2017 when their balance sheet was as follows. So what is the profit sharing ratio? 5:5:4:2. Who are the partners? A, B, C has a negative capital, C has a negative capital, D has a positive capital. Now, is there a current account given? No current account given, so capitals are fixed or fluctuating? Capitals are fluctuating. Read further. The following information is given to you. A check of 4,300 was received from a debtor which was not recorded in the books and was misappropriated by C. Is it related to dissolution or error? Error we have to rectify. How to rectify this error? Okay, same like in your foundation level, you would have passed. What is the correct entry? Cash or bank account debtor. To which account? Debtor's account. This is the correct entry. But wrongly it is misappropriated. It is wrongly misappropriated. So it is not recorded through this. It is not recorded at all in books. It is not recorded at all in books. A check of 4,300 received from a debtor was not recorded in the books and it was misappropriated by C. So when something is misappropriated, it is like drawings. That is C's capital account data. Otherwise, the collection he has taken to his pocket. The collection he has taken to his pocket. How much? How much? 4,300. Now, because of this, what will be the impact? It's an entry that should have been passed, that is not passed. Because of this, what is the effect? Debtors balance, what is the debtors balance? 42,000, it will come down by 4,300 rupees. So, because of this, debtors balance will become 42,000 minus 4,300. 42,000 minus 4,300, putting in our 37,700. 37,700 should be considered as debtors. Please remember, is it an adjustment relating to dissolution or prior to dissolution? Prior to dissolution. In the last year, error nadandhirukku, fraud nadandhirukku, that we record now. C's capital account data to debtors account. Why C's capital account data? It is taken by C, or you can put even C's drawings account data also. To which account? Debtors account. Next part. What is the next one? Investment costing 5,400 were sold by C for 7,900 and fund was transferred to his personal account. The sale was omitted from the firm's book. This is also not recorded. This is also not recorded. So how to record it? C's capital account data. Okay. To investment of the cost 5,400. It is sold for 7,900. 7,900. But there is a profit on sale. Profit on sale. What is the profit on sale? 2,500. What will you do with the profit? Where will you transfer? Do you remember? Do you remember? If the errors are rectified after preparation of final accounts, we will transfer to which account? P&L adjustment account. We will transfer to what? P&L adjustment account. If errors are located after preparation of balance sheet, we will rectify the error and transfer to which account? P&L adjustment account. Now, because of this, what will be the impact? What is investment value in the balance sheet? What is investment value in the balance sheet? 29,000 minus 5,400. 29,000 minus 5,400 will be the real book value of the investment. So debtors balance is 37,700. Investment balance is how much? 23,600. C's capital account debtor. Do you understand? This P&L adjustment account is credited because errors are located after what? Preparing the final accounts of the company. Okay, now wait for a minute. The profit is credited. This profit on sale of investment will be shared by whom? All partners. All partners in which ratio? Profit sharing ratio. Now take up this. Are they getting? Rectification of errors. We need to start with realization account or whatever. Before that, rectification of errors. Prior to dissolution. Please remember, it's an error of omission. So C's capital account data because it was taken misappropriated by C. Next again C's capital account because the sale of investment or the amount realized was taken to C's personal account. To P&L adjustment because it is rectified after the preparation of final accounts to investment 5,400. So this is the book value of asset. Shall we? Okay. I'll wait. See, if this is already recorded, no adjustment required. If correct entries would have been passed, like these entries were already passed now, then there's no adjustment required for them. Since they have not recorded, we are doing this adjustment. Done? Wait. How this will come in the capital account? We are going to prepare which accounts? Realization account? Capital account prepare பண்ண போறோம். Don't copy this. I'll give you time to copy. We are going to prepare which account? Capital account of partners. Who are the partners? A, B, C, D. Tell me the opening capital balance. By balance brought down 90,000. B 90,000. C debit balance. D 35,000. Now how this will affect? How this will affect the rectifications? C's capital operated. C's capital is a debit balance already. Two balance brought down. Two balance brought down 15,000 in D's capital. C's capital how much? 15,000. Asset side. Then to debtors and investment, we can combine it, no problem. Debtors and investment, எவ்வளோ debit பண்ணிருக்கோம்? 4,700 plus 7,300. 4,000. எவ்வளோ வருது total? 4,300 plus 7,500. எவ்வளோ? ரெண்டு ஆட் பண்ணுங்க. 12,000. 12,200. Okay. It is rectified. Then tell me the general reserve, old general reserve 24,000 by general reserve. By general reserve, any ratio is split பண்ணுவோம். Profit sharing ratio. What is the profit sharing ratio? 5:4:2 ratio. 5:5:4:2 ratio. 5:5:4:2 ratio. How much? 7,500. 7,500. 6,000 and 3,000. Then that P&L adjustment account. And the 2,500 rupees, same ratio. 5:5:4:2 ratio. This profit on sale of investment also will go to all partners in the profit sharing ratio. 5:5:4:2 ratio. How much again? How much? 781. 781. 624. 313. So this is the impact. So by balance brought down, general level service is transferred in which ratio? Old ratio. This profit on sale of investment was omitted in the books, that is recorded now and transferred to partners capital in profit sharing ratio. C's opening balance was a debit one. Debtors and investment has to be adjusted. Debtors and which one? Investment has to be adjusted for how much? 12,200. 12,200. Now, so remember, so far we were doing dissolution or rectification of error. Rectification of error. Now, go to that. A creditor agreed to take over investments at the book value of 5,400 at what? 8,000, 8,400. They took over investment having a book value of 5,400 for how much? 8,400. The rest of the creditors were paid off at a discount of 2%. Other assets were realized as follows. Building 105% of book value, stock 78,000. The remaining investments were sold at a profit of 4,800. The balance debtors realized at a discount of how much? 12%. Bills payable was discounted at a discount of 400. Expense on dissolution came to 4,900. It was found that out of the realization from C's private assets would be only how much? 4,000. Who became insolvent here? C became insolvent. That loss has to be shared. That loss has to be shared. So before all these things, let us prepare which account? Before the recording the insolvency, let us prepare which account? The realization account. Transfer assets. Transfer assets. Let us start. Now let us start together. Let us not put sundry assets. Let us transfer assets individually. In our stock value change agaliya. Building account, what is the book value? 1,20,000. 2. What is the next one? Stock account, how much? 85,500. Stock account approved. To investments will not be the book value. It will not be 29,000. After rectification of error, it is how much? 23,600 investments. Approved. Debtors 37,700. Investment பாத்தீங்கன்னா 29,000 minus 5,400. Debtors how much? 42,000 minus 4,300. Then what is the next asset? Cash will not be transferred. C's capital will not be transferred. What are the liabilities we need to transfer? By creditors account, what is the creditors account? 47,000 by bills payable how much? 20,000. Now, any asset that is realizing, you will put what? By cash or which account? Bank account. That is for any asset realized. Then, to cash or bank account for any payment made. Let us do some working notes also. Go to this. A creditor agreed to take over investments at a book value of 5,400 for 8,400. Wait, will it be recorded in books?
No.
Liability is attaching the asset. When a liability is attaching the asset, to the extent we don't realize money or we don't pay the money. Okay, we don't get this 8,400 or we don't pay this 8,400, no entry for this. Then rest of the creditors were paid at a discount of 2%. So while paying creditors, what was the total value of creditors? 47,000. 8,400. This minus percentage pay 2%, which means 98% you have to pay. 47,000 minus this into, we will collect 98%. Okay, any doubt in it? Creditors 47,000 minus investment taken over, balance is paid at 2% discount. No, what is the value at which they take over? 8,400. For example, my asset recorded in books 1 lakh. You are taking over at 2 lakhs. So obligation towards you settled at 2 lakhs. The 5,400 is only for my reference book value, but the obligation is settled the value at which it is taken over. Next part. What is the next one? Rest, a creditor. Okay, what is it? Other assets are realized as follows. Building in a solra, 105% of book value. It will come as by cash or by building. 105% of book value. 105% book value என்ன வரும்? Book value பாருங்க. What is the book value? 1,20,000 into 105%. This into 105%. Then, what is the next one given? Stock realized how much? 78,000. Stock realized 78,000 from. What is the next one? The remaining investments were sold at a profit of 4,800. Wait பண்ணுங்க. What is the investment debited in investment? What is the investment debited in realization? 23,000. இதுல taken over by creditors. Taken over by creditors book value. எவ்வளோ? 5,400. Balance book value. What is the balance book value? 23,600 minus taken over by creditors 18,200 at a profit. எவ்வளோ ப்ராஃபிட்ல சேல் பண்றோம்? 4,800 ப்ராஃபிட்ல சேல் பண்றோம்னு கொடுத்துருக்கான். So selling price will be 23,000. So investment 23,000. Investments debited in realization is 23,600 minus taken over creditors 5,400. The remaining book value, okay, sold at a profit of 4,800 means what is the selling price? 33,800. 33,800. Any doubt in it? Minus 20. So, 23,000. Then, what is the next one? The rest of the debtors realized at a discount of 12%. Debtors எவ்வளவு இருக்கு பாருங்க. Debtors balance after the rectification 37,700. So debtors realized is 37,700 minus எவ்வளவு percentage? 12%. 37,700 is debtors balance. That into minus 12%, 88% realized. Bills payable was settled at a discount of 400 கொடுத்திருக்கான். 20,000 minus 400. How much will come? 19,600. Then the realization expenses. What is the realization expenses? 4,900. Tally பண்ணுங்க profit or loss and loss or profit or loss. This realization loss balancing figure to be borne by whom? Who are the partners? In a ratio 5:5:4:2 ratio. The loss will be borne by partners in 5:5:4:2 ratio. 5 by 16, huh? Sixteen, 488 and what? 244. Once again, I repeat. Transfer assets at book value. Book value means after rectification of error. Investments misappropriated by C, 5,400 got eliminated there. Debtors realized and misappropriated, 4,300 got eliminated there. So these are all after rectification of errors, book value. Transfer liabilities at what value? Book value. Creditors attaching an asset, 8,400. Will it be recorded in books? It will not be recorded in books. The remaining creditors, 47,000 minus 8,400 settled at 2% discount. Bills payable settled at 400 rupees less. Expenses on realization potache. Building 105%. Stock given. Investment check panna 23,600 taken over by creditors. Balance at a profit 23,000 we get. That is for which one? Investment. Debtors, the remaining debtors, that is 37,700 minus 12%. You get this. Realization loss transferred to partners in which ratio? 5:4:2 ratio. Wait. When we prepare a capital account, how this realization loss will come? To realization loss, another 16, 488, 244. Any doubts so far? I told you already, if there is a insolvency, the first thing is what the solvent partners should do. They should bring in cash equal to the share of loss and realization because of the Garner versus Murray. Okay, who are the solvent partners? A, B, D. They should bring cash equal to which one? Share of loss and realization. This must be done. 16 and now it's 244. This must be done. Once again, repeat. For capital account, opening balance out irukka. Opening balance sheet irukku. What is opening balance? 90 and what? 35,000. C as a debit balance. Rectification of error for the debtors and investment. General reserve is transferred in which ratio? Old ratio. P&L account is adjusted. Why P&L adjusted? That profit on sale of investment prior to dissolution adjusted. Now wait pannunga. Cash to be brought in by who? Solvent partners in which ratio? On the share of loss of realization, the solvent partner should bring. Now, who became insolvent? Check the problem. Who became insolvent? C became insolvent. It was found that we are able to get only what? 4,000 from C. So, by cash or bank, how much is realized from C? Only 4,000 is realized. Balance loss should be borne by A, B, D. That is deficit. The deficit in DC's capital, tally pannunga, you will get it. Okay, this is the totals he has to pay. This is a loss due to insolvency. This loss due to insolvency should be borne by whom? This loss due to insolvency should be borne by solvent partners in which ratio? Adjusted capital ratio. Pay attention. Okay, what is adjusted capital ratio? Of which one? A, B, D. Take the opening balance. What is opening balance? 90,000 and what? 35,000 opening balance. Add general reserve. 7,500 for B, 7,500 for D, 3,000. Add any P&L adjustment. add any P&L adjustment. What is the P&L adjustment? 781, 781, and what? 61313, sir. 313. Now, can I take this? This is only in D's column. Can I take this cash brought in due to realization? No. I told you very clearly. What do you mean by adjusted capital? Opening balance, general reserve, P&L account, miscellaneous expenditure after rectification of errors if there is any. Do not consider which one? Any realization item. It can be realization profit or loss, or it can be asset taken over at the time of realization. All those things don't consider. So this will give us no miscellaneous expenditure. Adjusted capital. This is the adjusted capital. Adjusted capital is how much? 98 to 81. So what is the ratio? Ratio formula. I hope it will come in 2:2:1 now. No problem. So deficit. What is the deficit? What is the deficit in C? Deficit, that is 17,063 to be borne in which ratio? In this ratio. Seven thousand 140 varo. The last one. $2,783. So answer is like 7140, then 2783. Okay, so this is like to C's capital account. To C's capital account, how much should be borne? 7140, then 2783. This is the last due to insolvency borne by the solvent partners. The last due to insolvency is borne by whom? Solvent partners in which ratio? Capital ratio. Then the balance amount can be settled. The balance amount can be settled. The balancing. Once again repeat the entire process in 1 minute of time. What is the first entry we passed? Prior to dissolution, rectification of error. C's account debtor to debtor's account. Why? Check realized misappropriated. So debtor's balance after that is 37,700 transferred to realization account. C sold investment and taken to his personal account. So C account debtor 7,900. Investment 5,400. Since the error is rectified after final accounts, we use which account? P&L adjustment account. So that is recorded in capitals. Opening balance, old general reserve transferred, this P&L account also transferred. Then debit balance, C as a debit balance, rectification. Then we transferred assets. How to transfer assets? All assets at what value? Book value. All liabilities at what value? Book value. We realized money for various assets and paid for various liabilities and expenses. The realization loss is borne by partners in which ratio? Profit sharing ratio. When we close capital account, as per Garner versus Murray rule, okay, charge the realization loss, the solvent partner should bring in what? Cash equal to the share of loss in realization. Who brings in money? A, B and D brings in money. So C's estate pay only 4,000. The remaining loss to be borne by which partners? Solvent partners in which ratio? Capital ratio. What is the meaning of capital ratio? Adjusted capital ratio. How to work out adjusted capital? Take the capital opening balance, general reserve P&L adjustment account, you will get what? Adjusted capital. In this ratio, the deficit is borne. So 7140, 7140, 2783, the balance can be paid. Take it up. You can take it up. One minute. Realization account எடுத்துட்டீங்களா? You've taken realization account or not? கேளுங்க.
சார் இப்போ ஜெனரல் கேட்கிறேன் எக்ஸாம்பிள் கவர்மெண்ட் படி அவங்க சால்வெண்ட் பார்ட்னர்ஸ் வந்து தேர் ஷேர் ஆஃப் காஸ்ட் வந்து கேஷ் அவுட்ல எடுத்துறாங்க. அதுக்கப்புறம் இன்சஃபிஷியன்சி ஆஃப் ஃபண்ட் வராது கேட்கறது கேஷ் டெஃபிஷியன்சி
வரலாம். If all partners become insolvent, if some partner is not able to pay totally, then there is a loss, possibility of loss. Assets ரொம்ப கம்மியா ரியலைஸ் ஆயிருச்சுன்னா there is a possibility of loss. That will be called as insolvency of a firm. எல்லா பைசாவையும் கொண்டு வந்துடுறாங்க. Even after that there is a problem, then there will be an insolvency loss.
ஓகே அப்ப மேக்ஸிமம் அவங்க வந்து என்ன ரெக்கவர்
முடியுமா பண்ணிட்டு they will lose. We are going to see that problem where we will see all partners will become insolvent. Finally, who will lose money? Lenders will lose money. Lenders may be secured creditors or unsecured creditors depending upon money available.
சார் இதுக்கு பின்னாடி ஏதாவது காரணம் பார்த்து காரணம்
ரொம்ப simple. See, the partner is in. See, when a partner became insolvent, the financial position is weak now. So, like a caution deposit, on the date of dissolution, you bring the money. Estimated loss க்கு நீங்க cash கொண்டு வந்துருங்க. Surplus இருந்தா பின்னாடி எடுத்துட்டு போய். Surplus இருந்தா நீங்க you can take it back. To ensure the safety of lenders.
because இதே சம்பந்தே நாம நார்மலா லாஸ்ட்
Debtors 4,300, investment 7,900 in DC's capital. That is misappropriation, not recorded now. Now, cash or bank account is just to verify our answer whether we have collected and paid or the amount tallies or not.
சார் இப்போ கேஷ் அண்ட் பேங்க் அக்கவுண்ட் டேலி பண்றப்போ வர அமௌண்ட் தானே அமௌண்ட் டிஸ்ட்ரிபியூட்டட் டு பார்ட்னர்ஸ்.
This is the amount. 91,141, 91,141, 35,530. Amount distributed to partners need not be in profit sharing ratio. Whether amount distributed to partners will be in profit sharing ratio. In the summary, எல்லா சம்லையும் வந்து amount distributed to partners will be the balancing for let out in the partners capital. That's why cash or bank account, you should not take any balance there.
பார்ட்னர் ஃபர்முக்கு லோன் தராங்க. அது வந்து
It's an external liability. Partners loan. Okay. Okay. If you look at that, it's internal liability. It's internal liability only. Partners loan is an internal liability. But while dissolving the firm, settle பண்ண மாட்டாங்க. You will pay secured creditors. You will pay unsecured creditors. You will pay all the preferential creditors. Then you will pay what? Partners loan. அப்புறமா partners capital. For example, if A has paid some loan அப்படின்னு சொல்லியிருந்தா ஃபர்ஸ்ட் அவரோட லோனை ரிட்டர்ன் பண்ணிட்டு தான் கேபிட்டல் ரிட்டர்ன் பண்ண முடியும். We'll see அந்த பீஸ் வீல் டிஸ்ட்ரிபியூஷன் சாப்டர் இருக்கு இல்லையா, அதில் பார்ப்போம். ஃபர்ஸ்ட் கேஷ் இருக்கும், அதை வச்சு சம் எக்ஸ்பென்ஸை செட்டில் பண்ணுவோம், அப்புறம் செக்யூர்ட் லோன் செட்டில் பண்ணுவோம், அப்புறம் அன்செக்யூர்ட் லோன் செட்டில் பண்ணுவோம், அப்புறம் பார்ட்னர்ஸ் லோனை செக்ரிகேட் பண்ணி அதை செட்டில் பண்ணுவோம், அப்புறமா கேபிட்டலுக்கு பே பண்ணுவோம். அந்த மாதிரி we'll see. That is பீஸ் வீல் டிஸ்ட்ரிபியூஷன். No, loan will not be considered. Capital only will be considered. I'm going dead slow here in this question. I'm doing it for the past around 40-45 minutes because this is so important and most important for your exam point of view. Do you understand every part of it? Do you understand how to calculate adjusted capital ratio? Shall we proceed? What is the opening balance? Cash balance. 14,000? $14,500. To realization, payment on the by realization. By realization amount paid 328. By okay, partners collection regular A to B to D to C. How much ABD paid on the 16? 16 244 from D estate, C estate we collect 4,000. Payment made. Payment made. A க்கு எவ்வளவு பண்ணிருக்கோம்? By B. By D. Earlier, no? Cash account is just to show that, okay, the collections are equal to what? The payment. Opening balance, this much is realized from assets. This much is taken as a security deposit, applying Garner versus Murray from ABD. And we collected from C and we paid for liabilities and expenses. Then partners are settled. So the cash account tallies. So cash account, nothing should be taken as a balancing figure. It's just to verify in your exam that we have done the problem correctly. I'll come back to the display, 1 minute. We have done question number 10 now. Question number 11? No. Try question number 11. See, learning should take time, but next problem is more like a practice one. Should not take more than 15 minutes for us to complete. So, prepare, if there is any error, rectify it. Prepare which account? A realization account and capital account. Work out the adjusted capital ratio and share the deficit loss if there is any. Try பண்ணுங்க பாப்போம். நீங்க தான் ட்ரை பண்ணுங்க. இங்க அந்த omissions, last ப்ராப்ளத்துல debtors and investment are pre-dissolution events. That's why that is rectified first before we start with which one? Dissolution. A good question. Supposing a loss on sale of investment the minus பண்ணிருக்கும். P&L account adjustment we add because there was a profit on sale of investment omitted. Suppose if there was a loss on sale, we would have reduced here. Only pre-amalgamation, pre-dissolution event should be considered.
Sir, can you repeat what is the ratio?
Supposing investment loss இருந்துச்சுன்னா மைனஸ் பண்ணிருக்கோம்.
ஆ.
Question number 11. Ajay, Vijay, Ram, Shyam. Just push button. Debtors, there are two methods. One is you can put gross amount, debit 3,50,000, credit provision, or directly you can take 3 lakhs also. There is any asset taken over by the partner by partner's capital account. Shall we check the answer? Tell me the amount realized partner. Debtors account line. I mean, Ajay took over debtors at 80% of book value. The Ajay's capital only. For debtors taken over. How much debtors taken over? 80% of book value na 3,50,000 80%. Provision is not a loss. Provision is only an estimated loss. 3,50,000 80% put in over 2 lakh. 3 lakhs into 80% put rather 3 lakh 50 into 80%. How much? Then what is the next one? Shyam took over stock. For how much? 95% of the book value. What is the value? 1,90,000. Then what is the next one? Ram will discharge which one? Sundry creditors. It will come as 2 capital account, partners capital account. Ram for paying creditors. How much paid? 3 lakhs. Then other assets realized 3 lakhs. Other assets realized 3 lakhs. Director Putula. Then expenses on dissolution came to 30,000. That's it.
Other
இப்போ எல்லாத்தையும் கிடைச்சோம்னா நான் டைரக்டா ப்ராஃபிட் வந்துடும். லெஜர்ல ப்ராப்பரா ரெக்கார்ட் பண்ணும். Loss of profit or loss எவ்வளவு வருது? $70,000. Who are the partners? A, B, or yes. Any ratio? 4:1:2. Last share பண்ண next prepare the capital account of partners. Debtors 3,50,000 into 80%. And a ledger balance eவ்வளவு? This is not a bad debt. It is a doubtful debt. Ledger balance வந்து 3,50,000 தான். Collectible balance is 3,50,000. So into 80%. Next, prepare capital account. Who are the partners? A, B, or yes. Shall we? Yeah. Tell me the answer. By balance brought down, how much? 7 lakhs. Yes. 3 lakhs. Debit side, 2 balance brought down. 1 lakh. Then 2 realization loss. 2 realization loss eவ்வளவு?
8,000.
By cash to be brought in by solvent partners. Who are the solvent partners? A 28,000 or 7,000, yes 14,000. Garner versus Murray rule.
வந்து already அவன் கேட்டது டெபிட் பேலன்ஸ் இருக்கு. ஆனா
பரவாயில்ல, but Garner versus Murray rule solvent partners should bring in cash in for realization. That's not based on your capital. This is not based on your capital. Or 14. Then who became insolvent? B became insolvent. Hello, record பண்றோம்.
21,900.
By cash we recover only 21,900. By deficit to be borne by A and S in a ratio 7:3 ratio la bear பண்ணிக்கணும். What is the balancing for you get? The deficit should be borne by solvent partners. Inge no capital adjustment, no general reserve, no P&L adjustment, no miscellaneous expenditure. Only positive capital இருக்கிறவங்க தான் A and S. So 7:3 ratio they will share the loss. So to R's capital, S, and whose capital? B's capital. How much will be borne by A and R?
அப்புறம் இது வந்து லைக் மாதிரி ஒரு இன்சால்வென்ட் பொறுத்த வெளியே போறான்னா ஆர் வந்து அவனோட பார்ட்டியே கொண்டு வர மாதிரி இருக்கு. அது வரைக்கும் இப்போ வந்து நான் ரெண்டு பேலன்ஸ் இருந்தாலும் நான் அப்படியே வச்சுக்கிறேன்.
That is up to me. Now, positive and negative balance angradu relationship partners can decide. So, working partners may not have any capital at all, but still you can continue the home. But if there is a loss, they should bear. Even working partners will bear the loss due to this. Tally panna, what is the balance? To cash, what is the balancing? Where the one mark? Oh, to stock and debtors. That is realization items. To realization items, that is stock and debtors. How much was taking over? 2 lakh? A then? That will not be considered for adjusted capital. By realization and the R எவ்வளவு pay பண்ணிருக்கோம்? By realization, the creditors paid. This is for the assets taken over. This is to cash settled. And please remember, this creditor settled 3 lakhs should not be taken for adjusted capital. நிறைய பேர் என்ன பண்ணிடுவாங்கன்னா, okay, 7 lakhs, the 3 lakhs plus 3 lakhs இப்படி போட்டுடுவாங்க. Okay, so this 3 lakhs is a realization item that is taken over or paid. Don't consider any realization item for calculating which one? Adjusted capital. Adjusted capital இல்லை, 7 lakhs and 3 lakhs. Advertisement suspense, P&L account, debit balances, preliminary expenses, assets side இருக்கிற items which are not having any value, அதை adjust பண்ணுவோம், debit பண்ணுவோம். அது actually realization account transfer பண்ண மாட்டோம் இல்லையா? We will transfer to what? Partners capital. That errors happened before dissolution. In the rectification process, capital is adjusted, that should be considered. Cash or bank account to balance brought on சொல்லுங்க உங்களுக்கு. 1 lakh. அப்புறம் then to realization and the sundry assets realized. Then to A to எல்லாருமே கொண்டு வராங்க B what is the amount? A 28,000, B 21,900, or 14,000, yes 21,000. By realization, liabilities paid 30,000. By A 2,90,430. earlier now. Five lakh 24,900. We make only A and S responsible because R is having a deficit capital. R is having a negative capital. அதனால share பண்ணணும். 12th question we can do. 12th question you can do next after this. Yes, the loss due to insolvency, that is 1,85,100 is borne by other partners. Who are the other partners? A, R, S. In the adjusted capital ratio. What is adjusted capital ratio? Opening balance. Only A and S has positive capital. We don't have general reserve, we don't have P&L account, we don't have any miscellaneous expenditure to adjust. So, R had a negative balance. R had a negative balance. So, positive balance character A and what? Yes. 7 lakhs, 3 lakhs. So, in this problem, adjusted capital is 7 lakhs and what? 3 lakhs, nothing else. And this realization loss, assets taken over, liabilities taken over, etc., should not be considered for which one? Adjusted capital. Look at 12th question. It's a simple one. We can finish it in 5 minutes time. So let me to work along with you to save the time. The realization account. What are the assets you will transfer to? How much? To stock account 18,440. Then 7,000 liability la only liability is creditors. Expenses 520. Yeah. லாஸ் எவ்வளோ இருக்கு? 8,000. What is who are the partners? Amount in a ratio 3:2:1. Loan of A, how much is there? 2,000. This you can pay it like a separate item or journal entry could pass pannalam instead of transferring to capital account. But don't transfer to realization. You can pass separate entry like loan account data to cash and the money you can pass a separate entry, or you can add it to capital account and together you can pay. Anything is okay. Then, okay, to realization loss. What is the realization loss? 4140, 2760, 1380. By realization, that cash to be brought in Garner versus Murray. Who should bring in cash?
AB.
How much?
4140,
Then, by realization, by cash. Next.
AB.
Nothing is brought in by C.
2970.
What is the total? 29.
By cash 16,240 and 9,840.
2970 in ratio bear பண்ணணும். This capital ratio 152 is to 112 ratio.
1710, 1260.
17
1260.
1260. Balance will be paid in cash.
16,240
16,240 and
9,840.
let's verify with cash or bank account. To balance brought down. How much? 9860. Then to realization 48,190. To who are the partners? A to B. How much is brought in? By realization 38,770 by A by B. Actually, இதுக்கு ஒரு alternative treatment இருக்கு. Loan அப்போ நீங்க கொண்டு வரணும். Don't bring loan here. You can just pay by loan. Instead of putting this in capital account, you can put it as what? By loan, separate pay pannalam. Accordingly, the amount in A's capital will get adjusted. Anyhow, it is paid to A only. So this was treated in two different ways. One is transferred to capital account, another one is what? Paid separately. Both are allowed. Both are allowed. Yeah, by loan the separate pay panna 2,750. This two cash will get adjusted. Payable to A will be 2,750 less. So for taking adjusted capital, we don't consider which one? Loan. Loan is not capital. Okay, only this 15,200 and 11,200. No P&L account, no general reserve adjustment in this problem. Thirteenth question you can solve it at home. 13th question you are going to solve it at home. And 14th question we'll do it in the class. 14th question we'll do it in the class. And of course, after that we'll go for a break. Then we'll do which one? Insolvency of all partners, which means insolvency of the firm. Insolvency of the firm is a very small one. It will take only 2 minutes for you to understand. If all partners becomes insolvent, no Gardner versus Murray, no, sharing of deficit, etc., no bringing in of cash. Ultimately, creditors will lose money. Creditors will lose the money. We'll see. Try to work out which question? 14th one, huh?
Take like in the capital cash conversion.
Okay. Data, stock, and furniture, creditors, then realize assets, settle the liabilities, loss borne by the partners in profit sharing ratio. Then we prepare the capital account, settle the balance. This is for question number 14. Let us do it together. Let us do it together. Tell me the assets value. Furniture எவ்வளவு இருக்கு 40,000 அப்புறம் 2 premises 1,20,000 அப்புறம் stock account to stock account 1 lakh அப்புறம் வேற ஏதாவது இருக்கா debtors 40,000 then credit side or liability side இருக்கு பாருங்க creditors then mortgage loan how much 80,000 that's all general reserve etc will go to partners capital. expense எவ்வளோ? Then that's all இல்லையா? Yes, mortgage loan we have to pay. எவ்வளோ பே பண்ணணும்? Profit or loss? Loss, what is the realization loss? 1 lakh? 106.
Creditors ஒரு டவுட் creditors further creditors of 12,000 had to be paid na 20,000 plus 12,000.
இல்ல. Further means in addition to the realization expenses, creditors 12,000 had to be made now. நீங்க 20 plus 12 அப்படி இல்ல, டிஸ்கவுண்ட் எடுத்துக்கலாம். அதாவது expense on realization amount to 4,000. Further, creditors are 12,000 has to be paid now. 12,000 தான் creditors pay பண்றோம். பரவாயில்ல. ரொம்ப திங்க் பண்ணக்கூடாதுன்னு அர்த்தம். Further, see, obligation, they should use clear word. Apart from the balance sheet creditors, unrecorded creditors, additionally 12,000 to be paid. அந்த மாதிரி ஏதாவது நம்ம டீட்டெயிலாக திங்க் பண்ணுற மாதிரி டீட்டெயிலாக கொடுத்துருந்தானா பண்ணணும், இல்லைன்னா 12,000 பே பண்ணும். What is the realization loss? To be shared amongst A, B, C. In a ratio? Like NJ, VP. 3:2. No, it's not unrecorded. It's not unrecorded. How much of creditors are there? 20,000. அவங்களுக்கு 12,000 pay பண்றோம் அவ்வளவுதான். We are paying only 12,000 to the creditors. எல்லாரும் சொல்றதுனால இன்ஸ்டிடியூட் அக்செப்ட் பண்ணிக்க மாட்டோம். Clear up, is it given as unrecorded? No. அதாவது ரொம்ப சிம்பிள். நான் வேற பஸ்க்கு பே பண்ணி ஆட்டோவுக்கும் பே பண்றேன் அப்படிங்கிற மாதிரி. அது எக்ஸ்பென்சஸ். அது கிரெடிட்டாஸ் நான் 12,000 பே பண்ண அர்த்தம், அந்த கிரெடிட்டாஸ்க்கு 12,000 பே பண்ணணும்னு அர்த்தம். அது அப்பார்ட் ஃப்ரம் தி பேலன்ஸ் ஷீட் கிரெடிட்டாஸ் அடிஷனல் 12,000 டு பி பேட்னு கொடுத்துட்டானா? இல்ல
அப்ப அந்த கடனை அந்த மாதிரி கிளியரா கொடுத்துருவாங்க.
கொடுத்துருவோம், கண்டிப்பா கிளியரா கொடுத்துருவோம். Correct, loss. Who became insolvent? One by 6 தானே? 3/7 அது. Shall we? பரவாயில்ல. Tell me the capital balances by balance brought on யார் யாருக்கு இருக்கு? N and J 1 lakh. Balance brought down for to realization loss. Then by cash to be brought in by partners because of Garner versus Murray. Who should bring cash? Who became insolvent? Venus became insolvent. Huh? The solvent partners should bring in cash. This is 1 lakh and 60,000. Then by deficit. Oh, general reserve irukka. General reserve என்ன ரேஷியோல ஸ்ப்ளிட் பண்ணணும்? 3:2:1:1. எவ்வளவு இருக்கு அமௌண்ட்? 8,000.
Sir, general reserve, like capital reserve was created by appropriation of profits. The line sumara.
Just to tell that it's a past appropriation. Capital reserve also same ratio. Whatever the 6,000, 4,000, 2,000, 2,000. Oh, the who's insolvent? V. By deficit, nothing is realized. Deficit to be borne by N, J. What about P? Whether P will share the loss. P share பண்ணுவானா? இப்போ adjusted capital work out பண்ணி பாருங்க. Adjusted capital N, J, P work out பண்ணி பார்க்கலாம். Because after adjustment, if it is a credit balance, he has to bear the loss. After adjustment, if there is a credit balance, he has to bear the loss. N has a positive balance of 1 lakh. J has a positive balance of how much? 60,000. P has a negative balance of how much? 10,000 or 12,000. P has a negative balance of 12,000. General reserve பாருங்க. General reserve 24,000 for N. J என்ன இருக்கு? 16,000. P 8,000. P and L account 6,000, 4,000, 2,000. Adjusted capital see for P it became a negative amount. For P it became a negative amount. Suppose if this amount would have been positive, instead of minus 2,000, அவனுக்கு ஒரு 10,000 தான் என்ன பண்ணிருக்கணும்? அவனு ஷேர் பண்ணணும். ஸோ அதனால டெபிட் இருக்கிறதுனால அப்படி இக்னோர் பண்ணிடாதீங்க. பிகாஸ் we have got general reserve and capital reserve also should be adjusted. So adjusted capital is 1,30,000, 80,000. P is minus 2,000, so he will not bear the loss. So it will be adjusted to which one? N and J only. The exam always check the other partner's amount also. 15,143. This should be borne by the remaining partners. That is 2, N, that is whose capital? V's capital for N and J. What is adjusted capital? 13:8. 13:8 is the ratio. எவ்வளோ இருக்கு? Other party? You put the appeal into deficit balance 2000. See, P பார்த்தீங்கன்னா already he brought money 15,143 on debit balance இருந்தனால இன்னும் 2000 rupees shortage இருக்கும். He is not insolvent. He is bringing in cash. Suppose அவனு insolvent ஆயிருந்தானா, suppose if P also became insolvent னா இந்த cash கொண்டு வர முடியாது. 15,143 cash கொண்டு வர முடியாது. Okay, so அந்த loss add பண்ணிட்டு total N and J will share. If two partners are becoming insolvent, the remaining two partners add both the deficit and transfer to what? Remaining partners. Suppose இங்க P insolvent ஆயிருந்தா என்ன பண்ணிருப்போம்? This 15,143, let us see means nothing. This 2,000 also not brought in now. Some 17,143 shortage இருக்கு. So B ஓட deficit plus P ஓட deficit add both and transfer to whom? N and J in which ratio? Capital ratio. Suppose if three partners become insolvent, add up all the deficit and transfer to what? The fourth partner. அவனுக்கு கொண்டு வர முடியல, the firm becomes what? Insolvent.
சரி, இப்போ ஜெனரல் இப்போ இதே மாதிரி நீங்க இப்போ
Two balance brought down. What is opening balance? Cash balance, opening balance? To realization. Realization assets. To N, to J, to P. And the Garner versus Murray கொண்டு வந்தது 45. 80,286. Once again, P brings in. This is the balancing foreign capital. By realization of various items. Realization of various things. எவ்வளவு pay பண்றோம்? எவ்வளவு? By N by J. N எவ்வளவு? தாலியாதா? 1 rupee difference வருது. The 1 rupee difference is because of the realization loss transfer பண்ணும்போது அந்த 1 rupee difference is there. This 1 rupee difference is from which account? Realization loss. So hope you understand. More than normal dissolution, I concentrated more on insolvency of a partner. Fixed capital, no issue. Which one? Fluctuating capital, we have to work out which one? Adjusted capital. While working out adjusted capital, the point to be kept in mind is do not adjust what? Any realization item, which may be asset taken over or liability paid or realization loss. Nothing you should adjust. Take opening balance, P&L account, general reserve, any miscellaneous expenditure you have to adjust. Ignore partners loan. Ignore partners loan for calculating which one? Adjusted capital. One more thing that we learned is partners who are having a surplus balance only will bear the insolvency loss. Though P is not insolvent, he is having what? A deficit balance or a negative balance, he will not bear the insolvency loss. So, from the toughness of question itself, we can understand. This is the third class of partnership. First class, normal dissolution. That is tough. Second class, with which one? Fixed capital method. That's tough. Fluctuating capital method, we make a lot of adjustments. So, examination, if they ask insolvency, I do not know why, and it is, you know why. Okay, it is which one? Fluctuating capital method. So try to practice problem from ICA material also on this. Okay, we'll have a break, then thereafter we'll go for insolvency of the firm. If all partners become insolvent, what to do?